Hi everyone, this is Paul Fouché, Chief Investment Officer at New Road Capital, giving you your August market update. So as you recall, I sent an interim update around the first week of August, just talking about the sort of protracted equity sell-off that we saw at the beginning of the month. So it's been quite an interesting month because it started with that sell-off, and at the time, we said we think it was a bit of a knee-jerk reaction. There were a couple of economic numbers that came out. So the Bank of Japan raised their rates by 25 basis points, kind of going against the rest of the world in terms of lowering rates. And then coupled with that, some sort of slightly disappointing economic numbers out of the US. But if you put that in context, disappointing numbers in terms of what was expected, but still very good numbers in terms of the absolute value of the number. So we thought at the time that the sell-off would be sort of contained and would turn around quickly, and that's exactly what happened. So if you look through the month of August, you still had equities actually ending the month quite well in the positive. So local all share up about 1.4% after dropping about 4-5% in the beginning of the month. So quite a big turn, about a 6%, 7% run up after that. Followed by MSCI World, also up 2.7% in dollars over the month, and then the emerging markets index up 1.6%. So you can see overall equities actually having still a very positive month, and we're still quite bullish around equity markets. If you look at valuations globally in terms of equities, fairly good valuations. South Africa is still looking very cheap. If you just look at a forward PE multiple, so price to earnings multiple, still looking very cheap in a space that we like. But even developed markets, the US looking optically a little bit more expensive, but you've still got a lot of innovation and growth that we think will come through there, and you still got this AI revolution that we completely behind and back as a secular trend. So things looking good on the equity front. If you look at inflation, so later on in the month, the inflation numbers came out both locally and in the US. US inflation continuing to cool, which is a really good sign. Core inflation now sitting at 3.2% and headline inflation at 2.9%. So it's continuing to come down. And then leading into our inflation numbers, so our headline inflation now sitting at 4.6%, very much in the middle of the band that we're targeting. And core inflation, which excludes fuel and food prices, or energy and food prices, sitting at 4.3%. So very much contained. If you listened to Jerome Powell at the Jackson Hole Symposium, or the Economic Symposium, where they meet on an annual basis, also very, very dovish there, definitely looking to cut rates in September. So I think the market is expecting pretty much 100% that we will get a 25 basis point cut in September from the Fed, and then the South African Monetary Policy Committee will most likely follow with their own 25 basis point cut after that meeting. So some good news for consumers. We do see a 25 basis point cut in interest rates on the cards, both locally and globally, or locally and in the US this month. So that's looking positive. This month in the US, and then us to follow from that meeting. So that's looking positive. If you look at the rand dollar through the month, the rand was very strong. So markets, kind of still liking the sentiment around the newly formed GNU and the political spin-off of that. And you saw the rand starting the month at about 18.20 and ending at about 17.80. So quite a significant strengthening of the rand for the month. And then tying it and moving that into the bond markets, the local bond markets continuing to have a phenomenal run. The local all bond index up 2.4% for the month. So, we've been talking about the local bond market and the opportunity it's providing for a long time now, and it's definitely playing out and continues to play out. And we still think that is a good source of returns going forward. So you still got good value there. The Albi still yielding north of 10%. And just if we start seeing rate cuts, you got that capital tailwind as well. So really like that space. It's translated into fantastic returns for our funds over the last year. But again, another great month. For a bond market to run 2.4% in a month is quite significant. And then obviously, if you look at offshore bonds, we did do some changes, some rebalancing of asset allocations in our funds just before the recent downturn in July, where we did buy some offshore bond exposure, upweighted our offshore bond exposure. So took some equity risk off the table and bought some offshore bonds. And offshore bonds also running 2.2% through the month of August. So pretty much everything up again, another solid month. So equities and bonds having a really good month, despite the volatility at the beginning of the month. And yeah, we look forward to some interest rate cuts. We think that'll definitely come through in the next over the next few weeks and provide some pickup. So all in all, still looking good. Our overall thesis still looking good. We are bullish. We like what we see in the markets. And as always, if you need any extra information, please don't hesitate to reach out to me and the team. And until next month, we'll chat again, and hopefully we have another fantastic September as well. All the best and happy spring.